Mrs Bectors Food Specialities has had a bumper listing today at a premium of 74% over its issue price. Let's do a three-point analysis to find out if the investors must book the listing gains or stay put. 1. Blockbuster listing post the overwhelming IPO. Well, Mrs Bectors, one of the leading companies in the premium biscuit segment and the bakery segment as well in North India, has had its shares list on the bourses at 501 rupees on the BSE. That's higher by 213 rupees compared to the issue price of 288 rupees per share. In fact, the rally continued post the stellar listing, with the stock zooming past 108% to touch a high of 601 rupees per share in the first few minutes of the trade itself, which in its case was the upper circuit. Now, the BSE has fixed the upper band or the price band for shares at 601 rupees and the lower price band at 400 rupees for the listing day. Now, this is 20% higher and lower respectively compared to the opening price. Now, experts believe a premium listing was also expected given the IPO response, and also seems to be justified assuming the brand's business efficiency. The 540.5 crore rupees public issue had received an overwhelming response as it was subscribed 198 times. That is the highest subscription seen by an IPO in 2020. Mrs Bectors Food, which manufactures biscuits under the flagship brand of Mrs Bectors Cremica and bakery products under the brand English Oven, will utilize its fresh issue proceeds for financing the project cost towards the expansion of the Rajpura manufacturing facility by establishing a new production line for biscuits going forward. 2. Should investors book listing gains then? Well, most of the analysts are quite positive on the long-term prospects of the company. For example, Prashant Tapsi, AVP Research at Mehta Equities, has told Moneycontrol that he's advised investors to add and hold in the long-term portfolio for 2 to 3 years of investment horizon, as he believes that they foresee Mrs Bectors Foods as the next Britannia in making. While Keshav Lahoti, Associate Equity Analyst, Angel Broking Limited, has said that in the short term, if investors really want to take out money or profit, they can take out profit if they're making about a 50 to 60% with respect to the issue price, while the long-term investors, they believe, must stay invested in the company. Astha Jain, who is a senior research analyst at Hem Securities, has advised investors to book partial profit and hold the remaining shares on the listing day for long-term gains. 3. What will support the company's growth going forward? Well, the company has already gained market share in H1 of FY21 and reported results that are better than its peers. If you see, it has registered a revenue growth at a CAGR of 5%, but the profit, however, declined by 8% CAGR during FY18 to FY20. Now, Mrs Bectors improved its financial performance in the first half of FY21 with a profit of 39 crore rupees on a revenue of 431 crore rupees. Now, the strong foothold in the global market and also consistent focus on the product development in premium as well as the mid-premium segment is something that has helped the company achieve better price realizations. When you see it going up from 18 rupees to 22 rupees per pack, and operational efficiency resulting in sustainable margins even going forward from here. Now, the company is also consistent in incurring the capex in greenfield as well as brownfield expansion, which acts as a catalyst in its robust growth. Currently, Mrs Bectors is also operating at a capacity utilization of around 72% per annum. It also now plans to expand its production capacity to produce additional 14,400 tons of biscuits by FY22. And brokerage firm KR Choksi now believes that with the improving price realizations and also the asset turnover, the additional capacity has the potential to grow the top line at a CAGR of around 15 to 18% in the next 2 to 3 years. Other experts also believe Mrs Bectors Food is well placed to tap the growth in the organized retail segment. They also say the institutional bakery segment, which caters to the QSR or the quick service restaurants, is the next growth engine for the company going forward from here, and is going forward. If you see, the company is capable of even joining hands with the top retailers across the world as well. That will augur well for the company in the long run.